Hello traders, the title of the video is Breakout Trading on the Edge of a Moving Average, Tips and Tricks. So you want to trade breakout on the edge of a moving average and you are looking for trading tips and tricks. You are very welcome. Alright, so let's begin the demonstration. I don't want to talk too much. Alright, so breakout on the edge of a moving average, tips and tricks. So the breakout that I'm talking about today is the breakout above the prior high. You do not want to forget that because it is a high probability trading setup. So price going up from a high. Now the price finally breaks above that high. Alright, but very often the high probability trading setup that we are talking about will occur when the price just gently breaks above it, that prior high, and then we'll retest it right there. But talking about on the edge of a moving averages, alright, as the price breaks above that prior high, the price will also gently, alright, you like that word, gently, also pull back to retest a moving average. So we have a breakout above a prior high and a retest of a rising moving average. I recommend to traders to use the moving average 14, though this strategy is valid for moving average 20, moving average 30, moving average 50, moving average 100, and so on. Okay, I recommend to traders to use the moving average 14. So the first condition, price breaks above the prior high. Second condition, price is pulling back to retest a rising moving average on the edge. Now, the next thing that you need to look for is to check the candlestick pattern that have been formed on the edge of that moving average, and then from there you will implement a different time frame trading method for day trading, swing trading, and position trading purposes. We can apply the same strategy if we want to scalp a trade. Are you a scalper? All right, on the 5 minutes, on the 3 minutes, on the 10 minutes, on the 50-minute time frame, wait for the price to break above, okay, a prior high, and to pull back to retest the rising moving average 14. All right, if the common sense line is kaput, you have, okay, a reason to buy, to look for an opportunity to buy using a different time frame trading method. If you are swing trading, day trading, position trading, for scalping, it's better to use. Okay, I'm not going to dwell on this. So let's go to the topic because we want to keep it short. Here there is one good example here. So price goes up, boom, 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 boom. This was the high, yes or no? So let's put a line there because there's a shadow there. You peel through it, pull back, but that's the high, all right? Look what the price did here. Price breaks above. So first condition is what? All right, it breaks above that high. Talking about this one here. Color into pink. So it breaks above it. That's the first condition. That's the prior high here. So you may say, oh, Joe, why don't you put it here? We want to use something that is more practical. In this case, it's better to put it there. That's all. Okay? Now look what it did. So when you are trading first, here it is. So it breaks above it. It pull back, but it retests the rising moving at 14. Now I told you that you must check the candlestick pattern carefully there. This one got a long tail telling us that there is a support, there is a demand to buy on the edge of the moving at 14. So they bought it on the edge of the moving at 14 after the breakout. So it's not just by chance that the price tries slowly to retest the moving at 14 where all they were packed here to buy. Those orders were filled and the price quickly, order fills, price went back up quickly above the, okay, that high. The second candlestick bar, they want to buy again, look. So they bought it first time, they push it back above the pink line. Look, the second candlestick bar again bearish, and they push it back again. to the edge of that rising moving average 14. All right, so you understand why you should use the different time frame trading method. So probably, as you see here, you try it. Now you see that if you didn't apply top-down trading method, you see that the following candlestick bar is bearish. So you say, George, I'm not very sure about that trading method. All right. So if you didn't handle it properly, you may say, George, that method didn't work. Okay, because the following candlestick bar is not bullish. But look, then this one open here, and you see got also a bit of tail. So they bring it back again. So that's why you must use different time frame trading method to control it carefully. All right. So here again, from here, boom, up. All right. So this is what we are talking about. Breaks above the prior high, retests the moving average 14. So this is one example here. The second example happened here. So if you look carefully, there was this high here. Price stuck below that high. You see, that's the orange line here. Couldn't break above it for many, many years. You see here. Couldn't break above it. Now, finally, it breaks above the high. All right, it did here. 2016, it breaks above it. And now it breaks above. That's the first condition. Breaks above a prior high. That high has been there for some time, but that was the prior high. Breaks above it. What's the second condition? We want it to pull back now to retest the rising moving at 14. Now, what do I say? Pay attention to the candlestick bar, which means monitor the price structure in the vicinity of the rising moving at 14. So now you have that, okay, this candlestick bar with a tail, it touched it, and people bought it, which means all they were here to buy. Computers bought it, it went back up. Second candlestick bar a little bit bearish. As that candlestick bar tried to go below it, the people, you know, you have to understand this here, sometimes how the market tries to push the price above a trend line, above support or resistance level, above a moving average. All right, here it is. Carefully, they make sure that it close the rising moving at 14. Now our trading setup is ready because after this candlestick bar is closed, which is okay, a hammer. Okay, see here, this one got a tail, which means people were buying. This one is a hammer. Now we will implement a top-down trading method to buy. If I'm a swing trader, I'm on a monthly chart, I will use monthly chart trading setup, daily chart, okay, signal, and hourly time frame for the entry. So trader may say to me, George, are you out of your mind? I don't want to enter on the hourly time frame. I don't want to enter on the hourly time frame. Then I will use, okay, the signal. Then I will use the signal on the daily chart again as a trading setup, and I'll break it down: daily chart, hourly time frame, and 10-minute time frame. For swing trading, don't go below 10-minute time frame for the entry. It's up to you. You can break it down all the way to the 1 minute, but I don't recommend that. Okay. Okay, here it is. Look at that beautiful tracing. Brace above the prior high, which is the orange arm. Pull back to retest the rising moving average. Implement a top-down trading method. Pay attention to the candlestick bar, and then signal is fire. Select a low-risk entry point like a pro, and then. So look at it. How many months is this? 1, 2, 3, 4, 5. Will you be happy to be part of this action here? So that's what we are talking about. Brace above the prior high. Retest a rising moving average on the edge. All right. If you have any question or suggestion, all right, it's your time to put in the comment section. Very simple. All right. Breakout trading on the edge of a moving average. Tips and tricks. What are we looking for? That's a very good question. You want a price to brace above a prior high. Good. That condition is verified. Good. Now, second condition, we want it to pull back to the edge of a rising moving average. I recommend that trader use the moving average 14. If he pull back near the moving average 14, what are we looking for? We will examine the candlestick bar in the vicinity of the rising moving average 14. What's the next step? We implement a different time frame trading method. What can we use this for? We can use it for day trading, swing trading, position trading, even for scalping. If you think this video has been useful to you, all right, give us the thumbs up. If you think that this is another useless video, all right, give us the thumbs down. If you think that this video is an essential tutorial, feel free to share it on Google+, on Twitter, and also on Facebook. As always, this video is for educational purposes only, and the best approach is to use a demo account to practice until one masters it. Happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about breakout trading on the edge of a moving average, tips and tricks.